GameStop stock might be worth considering here. GameStop stock will probably be volatile due to the tug-of-war between short sellers and meme stock traders. It's encouraging that GameStop posted an income-positive quarter. Investors should assess their tolerance for risk if they're thinking about buying GameStop stock. Let's dive in. Here's why there may be hope on the horizon for GameStop stock. Welcome to Timely Investment Research. A position in video game retailer GameStop isn't appropriate for everyone. Some investors could choose to take a chance on GameStop stock as long as they're aware of the risks involved. GameStop stock looks more favorable now that GameStop's chief executive expects the company to achieve a profitable profile for the year. Let's be completely honest. GameStop hasn't had a stellar earnings track record since the onset of COVID-19. Wall Street isn't particularly optimistic about the future direction of GameStop shares. Yet, there may be hope on the horizon for GameStop and its stakeholders. Indeed, while GameStop's financial health isn't perfect, it might be better than the company's critics would probably expect it to be. Expect volatility with GameStop stock. Even though the meme stock mania of 2020 and 2021 has subsided somewhat, don't assume that it's 100% safe to invest in GameStop now. There's still going to be a tug-of-war between the meme stock buyers and the short sellers. To quote S3 Partners Managing Director Ihor Juzaniski, "It's really calmed down a bunch, but the volatility is still there. It's still a meme stock." Any share position in GameStop stock should be small in size, as traders could get whipsawed daily. Still, at least an investment in GameStop might be less risky now that the company's financials are improving. Not that GameStop's fourth quarter 2022 results were perfect, by any means. The company reported net sales of $2.226 billion, a slight decline compared to $2.254 billion from the year-earlier quarter. GameStop's shareholders should keep a lookout to see if the company shows improvement in this area in the upcoming quarters. GameStop's chief executive envisions a profitable year. Here's the good news, though. GameStop stunned the critics by posting a profitable fourth quarter. Analysts expected the company to report non-generally accepted accounting principles earnings loss of 13 cents per share. Yet GameStop actually posted a gain, not a loss, of 16 cents per share. In the year-earlier quarter, the company incurred an earnings loss of 47 cents per share. Thus, we can discern an improvement in GameStop's bottom-line results. Now, the company has to prove that this wasn't just a fluke. GameStop president and CEO Matthew Furlong certainly doesn't see the company's quarterly performance as a fluke. He confidently claims that GameStop has considerable cash on hand, negligible debt, streamlined inventory, and a path to full-year profitability. Furlong emphasized cost containment as part of the company's strategy, so perhaps GameStop can maintain its income-positive profile through fiscal discipline. What you can do now. Some folks will choose not to invest in GameStop because of the likelihood of ongoing share price volatility. That's perfectly understandable. Anyone considering a stake in GameStop shares should first assess his or her own appetite for risk. That said, it's encouraging that GameStop's bottom-line results are moving in the right direction. So, for the time being, risk-aware investors might choose to take a small-sized share position in GameStop. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.